I lost a lot of my own personal capital investing in China stocks in the first half of 2011. And believe me, I'm not the only one. I made a mistake. I invested a substantial amount of my own capital in one stock, and it turned out the company was reporting fraudulent results. The stock was halted for trading, then reopened 2 months later, down 66%. I lost 3/4 of my investment, and I placed a pretty big bet relative to the amount I normally invest in a stock. Based on the reported information from the company, this stock should have been a grand slam. Yet this company was able to deceive institutional investors, analysts, and auditors. The complete details aren't available as yet, but there's no doubt the company was committing fraud. It took me a month to decide if I was still interested in China small-cap stocks. I seriously considered abandoning the sector and finding another place for my growth capital. After careful thought, I decided to stick with it for the inevitable turnaround. Every stock in the sector was trading as if they were all fraudulent, and with 200 to choose from, it seemed a simple matter to understand how these companies were committing fraud, avoid the bad ones, and invest some capital in the good ones. Well, that's easier said than done. I've learned a lot about how they commit fraud in China, and you just won't believe what's going on in China. But I'm going to share with you what I've learned about fraud in China. I want to help you avoid the mistakes that cost me so much money. No doubt there is still plenty of undiscovered fraud. There are stocks trading at the valuations of a lifetime, and the short interest in many of these stocks will someday act like rocket fuel to drive them up the charts. This will be an overview of what goes on in the China sector. If I went into great detail, the webinar would last for hours. I'll see you in the next segment. As I stated, you won't believe how they commit fraud in China. China is massive and thriving these days. Many companies, oftentimes second and third generation family businesses, need capital for expansion. Expansion capital is hard to come by in China. Banks make very few business loans, and there's 2,000 companies trying to go public on the Shenzhen exchange. Only 100 will make it each year. 1,000 merchant bankers have been running around China for the last 10 years, promising the business owners the prestige of a U.S. listing, along with access to capital in return for merging their companies into public shells. About 600 China-based companies have come public this way with varying levels of success. The U.S. merchant bankers are very transaction-oriented. They want to close the shell merger, get the company some capital, and move on to the next one. The Chinese entrepreneurs who run these companies needed a more relationship-oriented partner. They needed to understand, before entering the transaction, that after completed, everything would change about the way they run their companies. After the transaction was done, the Chinese CEO was left with a war chest of cash, a U.S.-based law and accounting firm, and the mentality that he could now run his company just as he always had, as long as he generated the end result, regardless of the means. While I believe the majority of Chinese CEOs are basically honest, there's a startlingly high percentage who funneled off company funds in a variety of disguised ways, safe in the knowledge they would be immune to U.S. laws from within China. So in the next segment, we'll look at how they actually steal from us U.S. investors. Okay, let's cover bank fraud. Bank fraud is pretty widespread amongst China's small caps, and you just won't believe the way they do it. Let's start with how they fool the auditors and analysts. Both auditors and analysts have methods and procedures. The China companies have learned to anticipate their needs. As part of the process, reviewers will want to see bank statements in order to confirm cash balances and reconcile receivables against cash receipts and payables against cash outflows. When the examiner shows up at the company's offices, the bank statements are all ready for their review. In China, bank statements bear a stamp for confirmation the statements did indeed come from the bank. In its most egregious form, examiners are presented with falsified statements bearing the bank stamp which in China is known as bank chop. Bank chop stamps can be purchased on the black market in China for about $200. Therefore, stamped and confirmed statements obtained at the company offices are worthless. The smart examiner knows this and heads to the local branch of the bank to get the statements directly from the source. But guess what? The teller behind the counter hands statements to the examiner, but the teller is part of the conspiracy and has been paid off to hand fraudulent statements to the examiner. Another example of bank fraud happens when companies move money in and out of accounts in order to have the expected amount in the bank at the end of a reporting period. It may or may not be accurate reflection of the real financial condition. Another serious problem happens with CEOs who treat the company cash like it's residing in their own private checking account. A CEO might make an undocumented loan to a friend in return for hiring his cousin to work and get the money back in a few weeks. While this really doesn't affect the corporate performance, it is unacceptable under GAAP accounting standards and a hallmark of possible fraud. That's it for today. I'll see you in the next segment. Claiming assets they don't really own is a trick the Chinese have pulled on American investors. Here's an example. I heard a story where Chinese businessmen took potential investors to a very busy factory in the south part of the country. Upon arriving, the Americans were struck by a very modern factory bustling with activity and were prepared to take the company public and raise funds for expansion. After a bit more due diligence, it was discovered the real owner of the factory had been bribed in advance to hang a banner over his company's sign with a false name, thereby disguising the true owner and name of the business. The U.S. investors would have put money into an asset that didn't exist if they hadn't uncovered this pretty crude attempt to steal from them. Companies will often claim to own assets that they don't. A slicker version of the sign game is a faked agreement. Here's how it works. A CEO pledges an asset assigning property to a company. The company then uses this assignment to obtain some sort of financing. After the financing closes, the agreement is torn up as if it never existed, and the CEO maintains ownership of the never actually pledged asset. Several high-profile companies have been accused of some form of this maneuver, and it is proven out in a couple of cases. Along the same theme, there have been many examples of faking economic activity. For example, I know of one group who was considering financing a chain of auto repair shops. They visited the flagship location, which was large, full of energetic customers and activity. Later on, it was discovered the mechanics who worked in the shop had rolled their own cars into the bays and pretended to work on them while their relatives, posing as customers, came in and out of the facility. That's it for today. I'll see you in the next segment. Inflating revenues is another common way fraud has been committed. The most simple way is to fake the receipt of revenues. The company has to show more money coming into the bank than it really has. It's a simple matter of getting a bunch of fraudulent invoices from the black market and putting the revenues on your books. From there, these fake revenues have to be reflected in your bank statements as well, so you need fraudulent bank statements. This is simply a matter of creating the statements and presenting them to your examiner with the bank chop seal already stamped. Of course, you've obtained a fake stamp for about $200. It's common to claim receivables that don't exist. You claim to have shipped a product and the buyer is in on the conspiracy. When called by the examiner, the buyer confirms the purchase, but he has, of course, been bribed in advance to cooperate. There's a lot of fraud going on in the livestock industry where sales are double counted. For example, a pork producer might sell a whole generation of baby pigs to local farmers. They raise the pigs, sell them back to the pork producer, who then sells them to an end buyer. The hogs were never really sold to the local farmer, and the sale of the livestock is double counted. Since this is the same animal, this is not allowed under GAAP accounting standards. That's it for today. I'll see you in the next segment. Have you ever heard people say the Chinese always keep two sets of books, one with the real numbers and one for investors or the government? It is often true. It mostly happens to avoid paying taxes. In China, the tax system differs greatly from ours and is considerably simpler. Every business is issued a book of pre-numbered invoices by the government. Numbered invoices are presented when something is purchased and given when something is sold. At the end of your tax period, you add up your sales receipts and purchase receipts and pay the taxes on the difference. The numbered government-issued invoices are called FAPIO, and there's a healthy black market for their purchase. Discounts are often given to buyers who are willing to purchase without an invoice, hence the need to keep two sets of books. Contract fraud is prevalent in China as well. When two parties sign a contract, it is filed with the government. You cannot allow the other party to simply file the contract. You must have your own representative present. Parties to contracts have sued only to discover the document filed with the government bears little resemblance to the one they actually signed, and their signatures were forged. That's it for today. I'll see you in the next segment. Before I wrap up, I would like to clarify two issues related to China small caps that have been grossly exaggerated by the media. The financial media has had a field day crucifying any China-based company that came public via a reverse merger, otherwise known as an RTO, for reverse takeover. The RTO is a simplified way to obtain a public listing by merging with an existing public company that has no business. It's just a corporate shell. About 800 China-based companies have come public in the U.S. this way. Here's how it works. There are about 40,000 publicly traded micro or nano-cap companies in the U.S. with little or no operations. Any one of these companies can issue shares to buy the assets of a China-based operational company, and then the China company is in control. The media has suggested any company that came public this way is committing fraud. Since the merchant bankers don't scrutinize the private companies as closely before the RTO occurs, there can be a higher incidence of fraud. However, the reporting requirements for all public companies, no matter how they came to be public, are exactly the same. If a company has been public for 2 or 3 years, done multiple financings, and filed registration statements with the SEC, it is absolutely no different than Baidu or Google. The reporting standards are exactly the same. Suggesting a company is fraudulent simply because it came public via RTO is patently absurd. It's like saying a kid from a poor neighborhood can't go to Harvard and grow up to be president. Warren Buffett might find this laughable since his company, Berkshire Hathaway, came public via RTO. So did the NYSE Euronext, that's the New York Stock Exchange. Fraud is fraud whether you have the pedigree of a Goldman Sachs IPO or reverse merged into a shell. The second major misconception about China companies relates to the SAIC filings. SAIC is an acronym for the State Administration of Industry and Commerce. China small cap detractors will often point to a company's SAIC filings as a hallmark the company is committing fraud. The SAIC filings are the equivalent of filing for a business license in the U.S. When you fill out an application here, it might want you to estimate your annual revenues. It will ask for an address. You might choose to fill in any number of responses or move your business later. Since a business license or an SAIC filing have nothing to do with your taxes, you'll fill in anything you want. If you read a report suggesting a company has committed fraud based on SAIC filings, it's just not credible. Since the SAIC filings can be obtained by visiting the local government offices, applications filled out years ago might contain very dated information and be completely meaningless. There are other government filings that are far more important to identifying fraud. That's it for today. I'll see you in the next segment. If, after watching these segments, you've come to believe investing in the China small cap sector is treacherous, you would be right. I've done my job. So how do you navigate these shark-infested waters, or is it even worth looking at? Well, it depends on your style of investing. If you only like momentum stocks that are hot today, this might not be the right place for you. If you think of yourself as more of a value investor and are interested in a sector that has been beaten down to where the valuations are absurd, China small caps are for you. Profitable U.S.-based growth companies will trade at 40 to 60 times their trailing earnings. There are a lot of risk factors in China companies outside the fraud issues, so I don't believe we will see those kinds of multiples in the China small caps anytime soon. However, if these stocks simply return to 10 multiples on earnings, there are dozens of doubles, triples, and quadruples. The potential profits of a lifetime are there to be found if you're confident there's no fraud. So how can you determine there's a very low probability of fraud at any one of these companies? Well, if you're sitting at your computer somewhere in the U.S., you can't. If you get on a plane, go to China, and visit your favorite company, you still won't be able to figure out if fraud is being committed. Here's our fraud scale. When it gets to 100, we can safely assume a company is not committing fraud, and it's safe for long-term investors to own the stock. Let's start the scale at 33, as I believe it's reasonable to assume at least 1/3 of the China small cap companies are not committing fraud. From there, the only way to determine a China-based company is not committing fraud is through third-party verification. You must use a team of highly experienced Chinese forensic accountants on the ground in China, and you must have the cooperation of the company to come to a solid conclusion. Here are the steps that need to be taken. In order to move the meter straight to 80 in one step, you must obtain a copy of the company's VAT filings. This is the equivalent of a tax return in the U.S. Companies of any reasonable size will generally not cheat the central government on their taxes, as the penalties are way too severe. They also won't overpay their taxes. VAT stands for value-added tax, and the returns are filed with the SAT, State Administration of Taxation. The VAT filings are not public information, so you must get the cooperation of the company to obtain them. It takes a very close relationship to obtain VAT documents. Third parties say they have VAT documents on public companies, and indeed, some may obtain these by bribing government officials. But a great many of these purported VAT documents are false. Therefore, how do you ensure that the VAT tax filings and the overall taxes from the company have been paid? Through reconciliation. You go to the bank and ask for a printout of the bank statement that shows the tax payment wired to the SAT. You reconcile this with the financial information contained in the VAT and with the tax payments indicated in the audit. These documents should all agree. You cannot ask the company to provide you with the VAT filing. It could be a fake. You must go to a regional government office with a representative of the company, see the VAT filing on a computer screen, and then obtain a printout. From there, you must go to a regional bank, see the proof of tax payment on a bank statement, again, on a computer screen, and obtain a printout. If the company's VAT filing closely conforms with its SEC-filed financial statements, you can determine the company paid its taxes. You are now at 85 on a scale of 100 towards knowing no fraud is being committed. I am convinced many of the short sellers who profited handsomely from uncovering fraudulent activity in some of the larger China names knew they were right because they bribed a China government official to provide them with the tax returns and found major discrepancies. This information will never come out, but I believe it to be true. To move the scale to 95, we must obtain a copy of the company's bank records, and you cannot accept statements handed to you at the company's offices or at the local branch of the bank. As we covered before, a bank chop stamp can be acquired for about $200, and the local teller might have been bribed to hand out fake statements. You must go to a regional branch, see the statements on a computer screen, then obtain printouts of what you see. Once you have the bank statements, It is simple forensic accounting to compare revenues and expenses against money moving in and out of the bank accounts. If you're satisfied after obtaining accurate bank records, you are now at 95 on the scale. Lastly, in order to get to the 100 mark on the scale, normal auditor channel checks need to take place. In the normal course of an audit, random customers and suppliers are called and sometimes visited. If their accounts of their business with the company correspond to the records, you are at the 100 mark, as sure as you can be that you're seeing accurate financial reporting. China is like the Wild West times 1,000 on steroids after the Industrial Revolution. The U.S. is 100 years ahead of China in integrity issues. In the U.S., if you try to bribe a government official to provide you with non-public information, you are likely to end up in jail. In China, you are likely to end up in possession of the information you were seeking and about $2,000 poorer. There are lots of false bank statements, SAIC filings, and VAT filings being used by short sellers to smear the China small-cap companies. These short sellers are hiring detective agencies in China to obtain these filings by bribing officials, and much of the time, the customer is receiving falsified documents that meet their expectations. The government officials can't get in trouble because they never provide the real documents. They just collect money from suckers. I know of one specific basher using Seeking Alpha to get his message out. He claimed the company was committing fraud based on their SAIC filings. He even posted them in Chinese on the web. My team of investigators went directly to the government agency and got the SAIC filings. They did not match the ones he had received. We later learned this guy had hired a detective agency to get the filings. They collected their fee and sent him false documents. They probably had a good laugh later that night over a cup of tea at the expense of the dumb American. That's it for today. I'll see you in the next segment. Yes, it's a treacherous playing field, but worth the risk, as there are dozens of very legitimate companies growing very rapidly, making enormous profits, and providing highly valuable goods and services to the largest emerging consumer class in the history of the world. Every company on the buy list at emergingchinastocks.com has been through rigorous third-party verification. Let me give you a couple of examples. One company on my list has been vetted by 12 Chinese national forensic accountants from the due diligence experts at the research group China 360. Also, did you know Morgan Stanley Asia has recently made 2 major investments in China small-cap companies, one for $50 million and the other for $100 million. Here's what you need to know. Morgan Stanley spent $1.4 million in investigative expenses vetting those 2 companies. One of them is trading at less than 2 times this year's earnings with a 100% growth rate. Morgan Stanley invested their capital in the form of a convertible preferred, and the conversion prices are far above the current market price for both of these stocks. Both of those companies are on my list. Large share buybacks, insider buying, and cash dividends can also be used as signposts for anywhere from doubles to quadruples on your money. When this sector heats up again, you are going to want to know which China companies have some kind of third-party verification, and I'll have that information for you in my newsletter, emergingchinastocks.com. For about $1 a day, you can become a subscriber to emergingchinastocks.com and take advantage of the groundwork I have laid out in this sector. It's a small investment to make for enormous upside. Each month, I will provide you an overview of the companies on my list. Every weekend, I will give you a recap of the week's activities. When there's news or major market moves in any of the stocks, you'll receive a flash alert. You can choose to be notified in moving markets by Twitter. Click here to sign up for your free 2-week trial in emergingchinastocks.com. You can withdraw, no questions asked, in the first 2 weeks, and you won't be charged. I'll give you a full refund if you decide to withdraw in the first month. If you consider yourself a growth investor and are looking for the hottest growth companies in the world, $1 a day is a small investment for the superior guidance I can give you. Please sign up today so you're positioned with the right information when China stocks start running back up the charts.